Okay, now actual leave encashment received is 18 lakhs. Title should be there, that's compulsory. Table showing the computation of taxable leave encashment for the assessment year 25-26. And the person's name also of Mr. K. Now let's exempt least of the following. So first one will be the actual value received itself. So this is 18 lakhs. Second is statutory limit 3 lakhs itself because he has not claimed before. Now third is 10 months average salary. So 10 into 1,12,150. So that value is 11 lakhs 21,500. Now leave at credit we calculated 5 months. Leave at credit into average salary. So 1,12,150. So this value is 5,60,750. So least value is 3 lakhs. So exempted value is 3 lakhs. Taxable leave encashment 15 lakhs. The least value always I'll show it in a box and I'll put a tick mark. So it's easy for the examiners to identify. Now next one, the last problem we'll do. It's simple. He is retiring on the end of the month. So if he is retiring in between the month, computation is little difficult. So you do it again and again, then you will remember. Then you will learn the adjustments. Okay. Mr. G retired on 31/10/24 after 20 years of service and received 18 lakhs. So 20 years of service is important as leave encashment for 12 months. His employer allowed him 1.5 months of leave for every 1 year of service. That we have to ignore because income tax 1 year is equal to 30 days only. Private or anyone, they can give whatever they want for their employees, but we will not consider for tax computation. He has already encashed leave for 18 months. So the information is direct. 20 years he completed, 18 years he has encashed. So that meaning leave at credit is only 2. His salary for 23-24 was 1,50,000 per month. And from 1/4/24 salary was raised to 1,60,000. Compute the taxable leave encashment. So leave at credit 20 minus 18 we got as 2 months. Now average salary we have to calculate. Table showing the average salary. 10 months 1/1/24. 1/1/24 to 31/10/24. 31/10/24. So here 1,50,000. January, February, March. He has got 1,50,000. 1,50,000 into 3. 4,50,000. 4,50,000. Now April onwards he got 1,60,000. So 1,60,000 into 7. That is 11,20,000. So total 15,70,000. Now this is for 10 months. So 1 month salary divided by 10. So that is 1,57,000. 1,57,000. This is the average salary. Now the computation is very simple. Computation is very simple. What we have to do? This computation title should be there. Actual leave encashment. Actual leave encashment received. You have to write it in the outer column. 18 lakhs. 18 lakhs. Now let's exempt least of the following. One is actual itself. 4 values will come here. Actual 18 lakhs. Statutory limit 3 lakhs because he has not claimed anything before. If he has claimed anything, you have to reduce. Now 10 months average salary, 1,57,000 into 10. The value is 15,70,000. Now leave at credit, that is 2 months we calculated, 20 minus 18 into 1,57,000. So that value is 3,14,000. So which is the least value? This is the least value. So exempted value, exempted 3 lakhs, taxable 15 lakhs. Taxable is 15 lakhs. This is how you calculate. Calculation is little difficult, but if you do it again and again, you will be able to understand. So this is what I wanted to explain in this module. Happy learning. Thank you.